Hi everybody, it's FIBO Group, and you are watching to the Market Watch Review. Global stocks edged higher on Monday in volatile trade, despite Beijing's refusal to relax its zero-COVID-19 policy. The equity market saw travel and leisure stocks rise 0.6% on the Stoxx 600. Futures on S&P 500 and Nasdaq rose 0.3% to erase earlier losses. The dollar fell against major currencies, driving the pound up almost 0.8% to $1.1453, while the euro rose 0.4% to close parity at $0.999975. The resistance zone for gold is between $1,675 and $1,680 price levels. Oil prices fell, losing some of the gains made last week. Brent crude oil fell 0.1% to $98.37 per barrel, while U.S. crude dropped 0.3% to $92.29. Asian Pacific market. China's October surprise contraction in exports and imports was the first such simultaneous slump since May 2020. This was due to a combination of COVID curbs at the home and global recession risk, which further weakened demand and further dimmed the prospects for an economy that is struggling. The risk-sensitive Australian and New Zealand dollar fell sharply in Asia trade, but recovered when European markets opened. The Japanese yen fell below its Friday lows. Market of Europe. The Bank of England's decision saw the pound drop as high as 2%. It also warned that Britain faces the possibility of the longest recession in over a century. However, the central bank said that borrowing costs might not rise as fast as many expect. Jeremy Hunt, British Finance Minister, will present his fiscal statement on November 17th. The UK quarterly GDP growth numbers will be released on Friday. This will provide important information about the economy. Sterling, which is risk-sensitive, traded up 0.66% to $1.1446, reversing earlier losses. The euro rose to its highest level since Oct. 27 at a rate of 1.26%. Last time, it was up 0.27 to 0.9986. According to central bank data, the Swiss National Bank's foreign currency reserves increased in October as the Swiss franc's appreciation helped reverse a sharp fall in September. Market of America. The main takeaway from the U.S. October employment numbers was that the labor force is still strong enough to support the Federal Reserve. Although the market thought that the chances of another 75 BP increase were higher after the FOMC meeting and employment data, it appears that the market is only 1% likely to see a 0.75 point rise next month. Even though U.S. data on jobs were mixed, Canada's report is unambiguously strong. The number of full-time jobs jumped by almost 120,000, which is well above the expectations. The average hourly wage rose by 5.6% in September, up from 5.2% in September. For the first time since September 22, the US dollar was below CAD 1.35. That's all for me. Closely monitor the news background and be prepared for all the surprises of the market.